Hi, Luda Cook here with Coldwell Banker. I'm here with Mike Sheehan from Guaranteed Rate Affinity. Mike, can you tell us a little bit about the mortgage rates?
Absolutely. So as we're all too well aware, rates have kind of skyrocketed the last couple of years. The last month and a half, we've had a little bit of a lowering of those rates, almost over a full percent. So in the last month and a half, and we expect them to go down more throughout this year.
Wow, that's great news. So let's say on a $500,000 loan, how much savings is that for someone on a
That could
monthly
be as
basis?
much as $200 a month savings per month. In addition, right now we have this, I believe, a window in time before all those seller concessions evaporate if the market gets crazy again, where we can negotiate a 2-1 buy down, a 1-0 buy down from the seller, and that would save them an additional possibly $500-600 a month for that first year.
Wow. Can you elaborate a little bit what that means by, let's say, a 2-1 buy down?
Right. What it is you're temporarily buying down that interest rate for the first year, 2 years, or 3 years, and so it gives you an artificially lower payment based on the lower rate. So let's say you got a mortgage at 6.5%, but we got a 2-1 buy down. The first year, that rate or that payment would be based on a 4.5%. Again, lowering your payment by about depending on the loan amount, $500-600 a month. So that's pretty significant. And then later this summer, rates keep going down as we hope that they will. We can refinance you into that for permanent. So it depends on what those rates turn into as we go into this election year, but very powerful and helps the affordability.
So let's say you bought a house a month from now, you did the 2-1 buy down and you wanted to refinance 6 months from now. What does that look like for the buyer?
Yeah, so the beautiful thing about temporary rate buy downs as opposed to permanent rate buy downs, when you refinance, you don't lose that money that we put in escrow to buy that rate down. So if there was, let's say, a year and a half of that escrow amount, let's say it's $8,000, you don't lose that. It goes to reduce your principal amount when we refinance you down the road. So it's really powerful, and
Wow.
It's kind of a no-brainer.
Yeah. Now, where's this $8,000 coming from?
The seller or the lender, or a combination of both, pay to fund that temporary rate buy down, and it goes into an escrow account. And what it does is it artificially lowers that or contributes to your payment to make up the full rate payment.
Wow, so that's even more money that's not coming out of your pocket as a buyer. Well, that's great news. Thanks, Mike.
You're welcome.
It's so good to talk to you about this and learn from you. Mike Sheehan here with Guaranteed Rate Affinity, and I'm Luda Cook with Coldwell Banker. Give me a call if you have questions or if you want to see if you can get into a home. I'm very passionate about building generational wealth. Call me.